story this evening. We're tracking the CPI headline inflation number. The consumer price index inflation edged up marginally to 0.71%. Now, this is up slightly from October's record low of 0.25%. This is also the third straight month below the RBI's 4% target. The central bank has slashed its inflation forecast in the current fiscal to 2% from 2.6% earlier. This time, what stood out first was the fact that food inflation came in at 3.91%, moving up from October's negative territory of minus 5.02%. Now, within the food basket, meat and fish prices rose by 2.5% and egg prices almost doubled from the previous month, increasing by 3.77%. It was not a very friendly month for vegetarians too, because while vegetable prices declined by over 22%, it was still higher than the decline of 27.57% observed last month. Prices of spices and oil, though, eased with relatively higher margin. If you look out of the food universe, housing prices went up by 2.95%, clothing and footwear prices by 1.49%, and fuel and lighting prices by 2.32%. Experts believe with visibility of the print remaining below 4% in Q1 FY27, the room for another 25 basis point rate cut is still open. And as per sources to NDTV Profit, the Union Cabinet has approved the Insurance Amendment Bill, increasing the cap of foreign direct investment into the sector to 100% from 74%. The government plans to introduce the bill in Lok Sabha on Monday. Now, with this reform, foreign investors will be allowed to hold up to 100% stake in insurance companies based in India as compared to the existing rule. Finance Minister Nirmala Sitharaman in this year's budget speech had proposed to raise the stake of foreign investment limit in the insurance sector. Let's go across to my colleague Rishabh Bhatnagar for a detailed report on this bill.
Right, what we've reliably learned is that the Cabinet has approved the Insurance Laws Amendment Bill. That is something that is a major reform in the insurance sector, one of the biggest since the year 2000. And what this essentially does is that this lifts the FDI cap from the existing 74% to 100% in the insurance sector. This essentially means that foreign investors can now own up to 100% in insurance companies in India. What the meaning of this is that this is essentially aimed at broadening the base of insurance in India. Insurance coverage in India is currently quite low. The penetration is quite low. And for a country the size of India, multiple players are required to increase that penetration and coverage. So that is something that took place in the Cabinet today. What this also allows is that this allows composite licenses. That means that life, general, health insurance can now be sold under one entity. What this also does is that this will also help a lot of agents that work in different sectors, which is the life, general and health. This will now allow agents to work in multiple sectors, and this will also break the current distribution monopoly in the insurance sector. What we're also seeing is that this might impact the agent networks of the likes of LIC and SBI Life, but what we'll also see is that this means that more competition might come in, but that is necessary for the country of the size of India, more and more players to enter the insurance sector. What we're also seeing is that as part of this bill, this also grants the LIC board full autonomy on branches, hiring and operations, and also putting it in direct competition, and rather putting it in direct stature with private insurers. So this also gives a state player, LIC, a level playing field to also compete with the likes of large private insurers that also have larger pockets to deal with.
To now help us understand the impact of this bill on the industry and more, I have with me Narendra Ganpule, partner and national leader at FS Consulting, Grant Thornton, Bharat. Thank you so much for joining us, sir. My first question to you would be, what according to you are the immediate implications of raising the FDI cap to 100% for foreign investors already holding stakes in Indian insurance companies?
Yeah, no, firstly, Malika, thanks for bringing me in. Firstly, this is a watershed moment for the Indian insurance landscape. Allowing 100% FDI is a absolutely strong signal of the confidence in the sector's potential, as well as the commitment to economic reforms that government has indicated. And this move, according to me, not only will boost the foreign investment, but also fundamentally improve the quality and reach of insurance services for every Indian citizen. Coming to your question about existing insurers who are already sitting maybe at 74% or 49%, I'm sure these discussions have been already taking place in the boardrooms, because this increase in 100% FDI to 100% FDI was in the making for a fairly long period of time. So I'm sure the boardrooms have discussed this in terms of what their stance should be, and we should see announcement coming through over the next 12 months or so about what existing foreign investors are going to do where they are already invested in India.
Okay, so while we do keep an eye on that and you describe it as a watershed moment for the Indian insurance space, in your view, how long might it take for the full benefits of 100% FDI to materialize, and what short-term challenges could arise on the way?
That's a great question, actually, because it's not that if the bill gets passed or tabled in the parliament, gets passed, etc. It's not like on 1st of January, suddenly you're going to have 100% FDI being increased or composite licenses being implemented, because it's a process which takes its own time. As far as 100% FDI for existing insurance companies, I've already explained to you, it will go through the internal board mechanism to dial up the stake to 100%. I'm aware of the fact that there are many foreign investors who are waiting for this development to happen, and they will be elated with this development. And I'm sure the wheels will be set in motion for them to enter the India market, which will happen over the next 12 to 15 months or so. As far as the composite license is concerned, the life business and the non-life business is fundamentally very, very different. Their operating models are very different. Their technology setup is very different. Their processes are very different. So it will take some time for companies to gear themselves up and be ready to be a composite license. And this will require a lot of guidelines and changes in the underlying regulators as well. Okay. So government or parliament may do its job, but there is a lot of job which IRDA now needs to do to disclose or come up with the guidelines to enable these things.
Okay, then I actually had a different question in mind, but what you just said, right, that there would be certain amendments that would be required. So are you hinting maybe at the possibility or the reality that the current rules or amendments or framework that currently exist for the 74% FDI limit in the insurance space, and when that cap increases, the current framework is not really ready to handle such an investment, or what is it?
No, not really. So when 74% was announced, or the currently 74% what allows companies to do or investors to do, we need to really look at the fine print of 100% FDI. What all has it been relaxed? Just as an example, in case of 74%, the key management personnel have to be Indian citizens. Most of the KMPs had to be resident Indian citizens. That was the prerequisite or a requirement when the 74% was allowed. Similarly, there was a requirement around the composition of a board of directors as well, right? So there were a bunch of finer details which were attached when 49 became 74. So now when 74 is becoming 100, we really need to look at the fine prints around that in terms of have all these things being relaxed, or how is it? So only then we can comment on some of these aspects, Malika.
So when you think about this news, is this good news just for the smaller insurance companies perhaps that sort of get a boost to penetrate deeper into the market because higher capital from outside would act as a catalyst? Or could this also serve well to the large established companies in India, for example, like a leading player like LIC?
Yeah, I think, in my opinion, it's a good news for the industry as a whole, as a sector as a whole, right? Okay. So I don't think I would single out necessarily it's beneficial for large players versus small players as such. For that matter, we may see an increased M&A activity potentially happening in the market as well, because smaller players or players which were below par in terms of their scale, which were not able to scale up, the foreign investors may really look at this as a license play acquire those companies and then set up the business or try to grow the business in India. So this potentially will give rise to a lot of M&A activity as well in the market. The large players may also look at acquiring the small players. I won't rule out that possibility either, Malika.
Byproduct, potential byproduct at least. But sir,
Right.
from a regulatory perspective, what safeguards does the government need to implement to ensure policyholder protection amid increased foreign ownership is kept intact?
Yeah, look, thankfully, fortunately, FS regulators in India, all the way from RBI to IRDA to everyone, has been extremely vigilant about this particular aspect, right? Protecting the customer interest, protecting the policyholders' interest has always been extremely paramount, concern, objective of all the regulators in India. And to the credit, hence we don't, we haven't seen really any company, be it a bank or be it insurance company, really going belly up in that sense. Speaking about insurance, particularly the IRDA has always maintained that as far as the required solvency margin needs to be 150% of what you actually should be holding. So they are always keeping that extra cushion of as much as 50% of the solvency margin, just to ensure that on a rainy day, unforeseen situations, the policyholders' interests are always protected. So I'm quite sure that IRDA in this particular case will keep all the safeguards and the policyholders' interest absolutely at the center. While without compromising anything on that front, Malika.
Okay. Then just your last comment on this. What lessons, according to you, can Indian insurers draw from global markets where 100% FDI is already permitted?
Yeah, look, I mean, if you look at the India market and let's look at life insurance market first, it's significantly dominated by bank assurance companies. Those who have bank as a shareholder, those have dominated it. LIC is the one which runs predominantly on the tied agency channel. Globally, if you see, D2C digital, which is direct to consumer digital, is a very evolved channel of distribution. That's something which is worth learning by life insurance sector. And I'm quite sure that with increased capital inflow, not only the capital is coming in, but innovative operating models will also come in into the market. Innovative products will come into the market. This, along with composite license, will potentially see life and health products really being sold more like a cafeteria approach or a bouquet approach, right? So I'm seeing a lot of these developments, which we've seen in the global markets, to really, come to India potentially with this expansion of limit being made to 100%. And last but not the least, I'll be remiss to kind of not to talk about it, is that the government has talked about insurance for all by 2047, right? This particular move augurs extremely well for deeper insurance penetration, because more businesses, which will mean more competition, more innovation, and deeper penetration. And last but not the least is that this will hopefully create job creation as well, right?
Okay.
Because more businesses, more companies, more jobs in the market across the sector. So multiple things, benefit to be benefited by the sector.
Understood. So more competition, deeper penetration, more innovation, as well as job creation. Thank you so much for helping us make sense of that. Of course, this is going to be discussed further in the Lok Sabha on Monday. But as you said, merger and acquisitions could be a good byproduct of this insurance bill, and you described it as a watershed moment for the insurance sector. Thanks so much for giving us your time, sir.
Pleasure. Thank you for having me.
Thank you.
Cheers.